Investors are not able to properly digest the flow of crucial information. Yesterday, the US Fed presented its beta forecast for 2023. Today, the Bank of England and the ECB have come up with their policy updates. Apart from policy meetings, the market should absorb fresh data on retail sales and the labor market. InstaForex analysts will guide through the maze of events and data. Wall Street felt bitter disappointment on Wednesday because the Fed's outlook came as an unpleasant surprise. The press conference of the Fed's chairman hurt market sentiment and pushed the benchmark indexes down. The major stock indexes closed the highly volatile session yesterday with considerable losses. The Dow Jones slipped 0.42%, the Nasdaq closed 0.76% down, and the S&P 500 crossed the landmark level of 4,000 and dropped 0.61% to close at 3,995 points. The doom and gloom settled on Wall Street in the New York pre-market. Futures on the key stock indexes extended their slide. The fundamentals do not encourage a trend reversal intraday. Traders are braced for another volatile session. The S&P is expected to trade in the intraday corridor between 3,910 and 4,020 points. The stock indexes fell on Wednesday after the Federal Reserve raised the key interest rate by 50 basis points and signaled its commitment to the fight against high inflation. The rate-setting committee passed this verdict anonymously. 7 from 19 policymakers voted for further rate hikes because the risks of a high inflation outweigh other risks. In the following press conference, Jerome Powell said that inflation remains way above the target level of 2%. The Fed needs convincing evidence of a steadily waning inflationary pressure. The federal funds rate was increased to 4.5%, the highest level since 2007. Policymakers are expected to raise interest rates to 5.125% in 2023, and this figure became the bitter pill to swallow as Wall Street lost the hope for the dovish reversal in the Fed's rhetoric. The U.S. economy has not entered a recession yet, though the chance for a soft landing is fading. Investors are stoking fears that the Fed Reserve will push the economy into a protracted recession, thus causing high volatility in the stock market. Jerome Powell is not alarmed by such prospects. He defined the low GDP rates predicted for the next year as a modest economic growth. Besides, the Fed projects the unemployment rate to rise to 4.6% in 2023 from the current 3.7%. The regulator intends to keep interest rates at elevated levels at least for the nearest 2 years. Almost all the 11 sectors included in the S&P 500 closed yesterday in the red. Healthcare was the only sector to lock gains. The financial sectors showed the weakest performance, having lost 1.29%. Stocks of the companies with a mega capitalization are extending their losses for a second day in a row. Tesla is suffering the heaviest losses. The Securities and Exchange Commission reported that the CEO of Tesla, SpaceX, and Twitter sold nearly 22 million of shares in the first 3 days of the week at the price from $155 to $177. As a result, his stake in Tesla contracted to 424 million shares, or by 13.4%. Moreover, Tesla shares dropped 3.2% yesterday and shed another 1.4% today. All in all, Tesla shares have plummeted 55% this year, and the company's market value has shrunk from $1.2 trillion at its peak to less than $500 billion today. Apart from a dismal corporate news, investors will have to digest policy decisions of the Bank of England and the ECB. Both regulators have already announced rate hikes by half of a percentage point. Now the markets are absorbing the forecast for monetary policies in 2023. The economic calendar contains a batch of macroeconomic data, including US unemployment claims, retail sales, and industrial production data. The US first-time jobless claims unexpectedly went down last week, thus causing headache for the stock market. The number declined to 211,000 instead of 230,000 in the consensus. Such data does not signal any recession and does not match the Fed's expectations of a labor market cooling down. US retail sales skied at 0.6% in November, following a 1.3% jump in October. The reading is much worse than the forecast of a decline to 0.1%. It's the sharpest contraction this year. The manufacturing PMI by the Federal Reserve Bank of Philadelphia remained on a negative territory, but rose 6 points to minus 13.8% in December. The market expected a reading at minus 10. Major central banks set the currency in motion. Today, it looks like a high of activity. Due to market turbulence, the US dollar index won back 0.38% and rebounded to 104.10. The intraday corridor for the index is seen between 103.80 and 104.50. Yesterday, the US dollar gave a muted response to the Fed's rate hike. However, the index is regaining its footing today amid higher volatility. The outlook for the greenback is obscure. The currency market is set to make erratic moves. Unlike major currencies, the Canadian dollar is trading quietly today, having gained 0.38% today. The USD CAD pair is trading within the corridor between 1.3560 and 1.3640. The loonies volatility calmed down last week when the Bank of Canada's governor delivered their hawkish message. Tiff McClam said that the central bank would resort to the aggressive tightening next year if the high inflation is not defeated. The Canadian dollar's rally is propped up by growing oil prices. WTI gained 2.89% to trade at $77.57 a barrel, and Brent crude futures rose 0.33% to trade at $82.98. The oil market owes its growth to optimistic forecast for 2023, while global investors are speculating on the aftermath from the recession and its scale. OPEC and the International Energy Agency foresee beyond energy demand. With such rosy prospects, both benchmark rates are staying afloat, though the market encounters a gloomy news from China and the shutdown of the large oil pipeline in the United States. The crypto market is trading quietly today. The Fed's hawkish rhetoric and the prospects of aggressive monetary tightening of major central banks dampen sentiment in the crypto market. However, cryptocurrencies used to survive after shocking news on scandals and investigations. Thus, unlike the stock market and the currency market, the crypto market is showing resilience. Though Bitcoin retreated from $18,000, it's still holding above $17,200 and upper border of its two-week trading range. Ethereum, the token with the second largest capitalization, is hovering at around $1,300. Crypto assets are not going to give up. Bitcoin is testing new borders of a tighter trading range between $17,500 and $18,100. And this North American session is also going to be highly volatile for obvious reasons: a series of policy announcements and a flood of economic data. Good luck and see you tomorrow.